no other person than Ngozi Adeleke. She's on the call now, so she will give us an introduction. Then we'll get into the conversation, setting the conversation and the tone for the place of finance and pipeline development. We'll get into the panel sessions. We speak with audience also. All of you here are very key. We want to hear some of the questions you have. And we have two wonderful panelists here that are core finance persons, those that have been developing finance in the pipeline and energy sector generally. They will help us to deal with some of the questions that we have. Key takeaways will be summarized. Then we will talk about the meat of the matter, being the NIPITEX 2026 conference, which is one of the reasons why we are here. This webinar only gives us a window into the conversation, but the actual conversation is going to happen in November on the 17th and 18th, and then we'll have our closing announcements. We also have more webinars coming up next month. We will talk about that. So without much ado, I will want to just introduce the president of the Pipeline Professional Association of Nigeria and the person of Ngozi Adeleke. Madam, the floor is yours. Give us our welcome and introductions, and let the audience get to know you and who we are as a plan. Thank you very much.
Right. Thank you very much. Okay. Confirm you can hear me.
Yes, we can.
Okay. Thank you. Super.
Yes,
super.
Yes, I can.
Okay. Good evening. Good evening, everybody. Welcome to this webinar, the first on our series as long as we prepare for NIPITEX 2026. I really want to thank everyone that has joined in. I see people have come in from far and wide, and I really am quite honored and, just really quite happy to see that people are actually interested, not just in NIPITEX, but this theme, which I think is very timely for today. So my name is Ngozi Adeleke, President of Plan, also convener of the NIPITEX 2026 conference, and we look forward to seeing you in November. I just want to say that today's conversation is very timely and it's urgent. As Oke has already said and alluded to, the recent award of marginal fields by NUPRIC has given an opportunity for Nigeria to unlock a new wave of production potential. But the reality is that if I have potential, but I don't have any evacuation infrastructure, that's called stranded value. I'll have nice, colorful numbers. I'll have figures on the PowerPoint of very vibrant, fine-looking infographics, but no value. We have a target. The president has said that he wants to see us be able to produce up to 3 million barrels of oil per day by 2030. And so instead of just the IOCs or what I'll call the big nationals now, the Seplats, the Renaissances of this world, the first E&P and Co of this world, to say, okay, they are the ones who are looking for to make up that number. He has realized that, when you want to set a target, when you set a very high target, typically you give yourself enough wiggle room to be able to achieve it. And I believe this marginal fields is what will help us unlock the value that we are looking for. So the question before us now is simple. How do we finance and build the next generation of crude and gas pipeline infrastructure so that we can move these volumes to the markets? We do it quickly, we do it safely, and we do it commercially as well. So these are meaty questions and one of the reasons why we have convened this webinar. So we want to be able to move from theory to practical pathways. We want to be able to connect developers and operators with DFIs, direct finance investors, with financiers, and with partners who can actually make projects bankable and take it from paper onto actual reality. So over the next 90 minutes, I'm looking forward to listening to our panel of experts who will break down exactly how we can access finance from various financial institutions and how we can structure projects that will meet the requirements. Because I think maybe that's where the gap to our potential has been information and understanding of what it will take for us to be able to meet the requirements, international standards, so that we can play in that space as well. And so I'm looking forward to learning, and I'm sure we have many people here who are looking to learn and understand what opportunities await us. So I'm encouraging us, please, let us listen attentively. Let's listen with rapt attention. Let's ask questions, and let us treat this as a start of what I would like to call real deal-making conversations that would culminate in November when we have the NIPITEX conference. So thank you, everybody. Let's go and get to work. Back to you, okay.
All right. Thank you, Ngozi Adeleke. Nicely put and nicely said. Potentials are not enough. We need to go beyond potentials. If you agree with me, Nigeria has demonstrated sufficient potentials, and the rebound we have at the moment for gas, because the first century or the first 50 years we've had is core exploration for oil, and we have been successful at that again. But the rebound we see now is a rebound that is giving opportunities for gas. So we will rebound with more pipelines available. But again, with the funding that is required, how do we unlock that already today? So I think that's the meat of the conversation. Before we go ahead so much, just to tell you a bit more about Pipeline of Nigeria, we serve as a national center of excellence dedicated to advancing pipeline engineering, operational safety, and regulatory development across the Nigerian oil and gas sector. Plan is about 20 years old, and after the first 10 years of Pipeline Station of Nigeria, it was launched, the Nigerian NIPITEX conference was launched as an avenue or a conference that allows operators and also pipeline people to come into play to have conversations, because just did not give plan the opportunity to talk to the operators one-on-one, and that is why we had this conference. This conference is going to be 10 years in November, right? And that is why we're taking our time to showcase what has been achieved, but most importantly, what we can do as we go ahead. And that is we're having, very serious one we're having as a pre-conference webinar series. And the title is Unlocking Development Finance for Nigerian Pipeline Projects. And accessing DFI funding is very critical to us. And we have two very important gentlemen here that are in the finance business. They understand very well what is required and have been in industry minimum of 20 years. I've worked with one of them already personally in the midstream industry, and the other one also is a very, very close friend of mine, and he will talk about himself as we go ahead, so I don't let the cat out of the bag. So two people we have on the call today from the finance sector. First of them all is Olusegun Oladipo. Oladipo is currently a part of a new bank called Providus Bank. However, there's been a merger, Providus and Unity. It's a new measure. He will tell us about it just a few minutes, just to tell us how he has been. He's currently playing in that space. He heads the head of engineering division for Providus Unity Bank. And the second panelist I have is Gabriel Yemidale. And he heads the oil and gas sector of Bank of Industry. So both of them will take their time, give us a brief introduction, 1-2 minutes of who they are, so we know their credentials, and then we will get into the meat of the matter. So I'll hand over to Dipo, just a few, 1 minute, 1.5 minutes. Tell us who you are and the experience you have, and then I'll pass over to Gabriel. Dipo, the floor is yours.
All right. Good evening, everyone. It's good to be here. My pleasure. My name is Segun Oladipo. I've done commercial banking for over 30 years. Currently, I'm the divisional head for divisional energy for Providus Unity Bank. Providus Unity Bank arose out of a merger between Providus and Unity Bank. Unity Bank, a bank for about 30 years, merged with Providus, young, vibrant, and dynamic. Currently, the bank has over 230 branches, and we have deep pockets to finance some of the things we're going to be talking about here this evening. Thank you so much.
Dipo, thank you very much. I like the way you say you have deep pockets. You never lose an opportunity to sell that thing. And again, I like the way you put it, because that's what we are here for us to unlock infrastructure across Nigeria, to get the gas moving into West Africa, to get the gas moving into Africa and into Europe. We need the deep pockets to go in. Thank you for that brief introduction. I'll pass now to Gabriel. I'm sure he has deeper pocket. Gabriel, just 1 minute, 1.5 minutes, just give us your credentials. Over to you, Gabriel.
Thank you. Okay. Good evening, everyone. My name is Gabriel Yemidale, and I work at the Bank of Industry, and I head the oil and gas desk. Prior to doing this, I've been with the upstream, and Okay mentioned earlier that we have worked together in the midstream space. So before working at Bank of Industry, I was a commercial advisor at Heritage Oil Limited. And what we did was we managed Fokido's pipeline. So that's what introduced me to OK. And now I'm managing the NCDMB fund, the 1% that everyone contributes we manage it here at the Bank of Industry. So that's why I'm here. And I look forward to engaging you all and also getting feedbacks from you. Thank you.
All right. Thank you. Thank you, Gabriel, for that conversation. You are not privy to this, Gabriel. I had a meeting with NCDMB yesterday. We had a conversation, and it became very clear to me that they have a mandate at the 1% that is being deducted from invoices across the upstream is being lodged in Bank of Industry, and for no singular purpose than to fund the Nigerian energy industry. Can you tell us a bit about that fund and what you think that fund can do? Because we're talking about funding here. And they were beating their chest to say that whatever projects that the midstream industry, the pipeline business needs to unlock, that they are capable and they have it already, most of them in Nigerian sector. So can you tell us a bit of that funding and how that can be of help in the conversation we're having at the moment?
Okay, thank you. Very good question. Well, as you know, the 1%, everyone that is accessing any contract or participating in any contract within the IOCs, the independent, the Nigerian National Oil Company, there's a 1% they take, which goes to the NCDMB. In turn, we invested this money, and what we do is we're trying to grow local capacity. We want a scenario whereby in another 10 years that people in Nigeria, our indigenous players in the sector can actually compete with the foreign people. So we are trying to bring OEM into Nigeria. That is the goal, and build capacity around that. And based on that, we introduced 4 different product lines, which is an asset acquisition, which has an interest rate of 8%. And the single obligor you can take on that is $10 million. We also have contract financing, which is $5 million, and that's 8% as well. So that means if you have any contract and you're trying to look for cheaper funding than going to the bank, the Bank of Industry in partnership with NCDMB is here to support you. We also have community financing. And what we do is that we play out also at the SME space. And this is very dear to the current executive director's heart. He introduced it. He wants to touch the life of the man in the community. He wants to grow them organically and take them to start playing with the big boys. And finally, we have refinancing. And what we do is that if you have loans with the likes of Providence Bank and the commercial bank at a very high interest rate, we are here to support you, to give you at a very cheaper rate. The maximum single obligor on that as well is $10 million. And that's what we do, just trying to grow local capacity within the oil and gas sector.
All right, Gabriel, thank you. Thank you. So all the financing that we require to expand the energy sector is already currently in somewhere where we can access it, right? But they say information is power. If we don't know that these funds are available, we will not be able to access them, right? Okay, so now you have told us some of the things that can be done. I will move to deeper, right? All of the conversation we're having now, it's development financing, and different people understand development financing to be different things. But in your own view, as someone that has been in the banking sector for such a long time, what exactly is development financing, and how does it differ from traditional commercial banking and lending that currently happens in the banking sector?
All right, thank you. Okay, development financing is what Gabriel does, where the development finance institutions focus on areas of, or how do I describe to you now? Areas of interest to government, things like that. Areas where ordinarily, while commercial banks are profit, focused, to return appreciable, returns to stakeholders. Development finance are focused on areas where the country, the region, the continent, will experience some level of growth. So you see development finance, interventions around healthcare, oil and gas, as we're talking about, areas where ordinarily commercial banks may not go to. And you can see that even from pricing, because there's a need, okay, to grow, for instance, this oil and gas activities, you can see the kind of buckets that a bucket of investment or bucket of financing that Gabriel has, okay, and at 8%. I will probably do interest higher than that because I need to return appreciable dividends, to my stakeholders. Okay, so while I'm profit focused, development financial institutions are more, the goals are different. They do interventions. They just want to ensure that there's growth and development it could be the country, it could be the region, it could be the continent, whichever way, the focus is. That is what drives them. That's what drives a typical development finance institution. Okay, and that's why we're different. I know that at the end of the day, too, BI must make profit because they still make profit, but they are not as focused as we are, when it comes to profit making. So you get more, they seem to be more friendly, but when we get to talking more, I'll begin to show some things to everyone here, where we're a lot more different and where some of the things they do, depends on on our own activity. There's some dependencies between they and ourselves. Okay, but for now, that's the basic difference. The bottom line is a commercial bank is strictly profit focused. The financial institution is not. It's more social. It's more, social focused, social investment, social interventions, and stuff like that. That is the basic difference. Thank you.
All right, Dipo, thank you. Thank you. I think you've made that very clear. They are both banks, right? But again, the focus on lending, they are reaching out to different parties, right? Why those differences are there, we believe that there are areas of collaboration, right, on large infrastructure projects, and that's why the two of you are on this call here. You've talked about Gabriel, seemingly like Bank of Industry as a friend. Gabriel has also reached out to you, in the conversations again, talking about it. That means there's some kind of synergy. And in developing infrastructure, we that are out there trying to develop infrastructure, how can we ride on both wings, right? How can we ride on both wings? How can we see the collaboration between commercial bank and non-commercial bank or development bank? How can we ride on that to do big things, right? We've mentioned deep pockets that you want to reach. Your interests are really higher, and that's for development bank and lower. Where is the bridge that we can benefit from both banks' collaboration? Deepo, if you don't mind, just elaborate a bit.
No, I will. I mean, not a problem at all. Let me, for instance, if you brought the project to me or even to Gabriel, and Gabriel wants to finance under some of these windows, Gabriel will probably require from me a guarantee. You understand, bank guarantee. That is actually the point of intersection between the two institutions. Okay, or other ways where I could take funds from Jigbo and on lend. Strictly in the oil and gas sector, these funds that Gabriel spoke about are funds that some of them can be lent through me. The first one for asset acquisition, for instance, at $10 million cap, 8%, tenor times up to 5 years. Gabriel requires Gabriel requires from me a bank guarantee. Okay, so you want to do, let's say, 30-kilometer pipeline from one place to the other, and the cost of execution is maybe $8-9 million. I've looked at it. I'm okay with the structure. I'm okay with the project, commercially viable, everything, all the dots, all the T's crossed properly, and I'm okay with it. I can say, okay, I'll take it off for you. I can't lend to you because of maybe you can't take my interest rate. Let me go to BOI. I speak to Gabriel. We both look at it. Gabriel is okay with it. Advances $10 million to me for you. Okay? I take the credit risk. Credit risk meaning that if something goes wrong, I pay Dipo because he has my guarantee. Dipo accepts my guarantee for this kind of transaction. That is how it's done. At times, it could go the other way. Dipo could approve a facility for you, a project finance for you, and says, get me a bank guarantee. a local bank guarantee, a Nigerian bank guarantee. So you come back to me and say, okay, I have an offer from BOI, from Gabriel, a $10 million facility, and I need a bank guarantee. I look at the transaction, I'm okay with it. I said, no problem. It's off balance sheet for me. I give you the guarantee. Gabriel advances the fund, or BOI advances the fund. I make it available to you. I manage it with you. I ensure that your payments are made to BOI as and when due, and we're good. We do that from time to time for customers. So that is the point of intersection between the two institutions. At times, we will go into syndication together. If the ticket is large, $50, $60 million, I say, okay, I'll take 10. Other banks are taking me 5. BOI could participate if they want to participate. DFIs do that, or the lead. They could be the lead bank in the syndication. Out of 50, they take 25, and they ask you to raise 25 from other local banks. So there are areas of cooperation and collaboration between institutions like that, and it happens from time to time. It depends on the size of the ticket or size of the project, and depends on the appetite of both institutions. In this case, a DFI and a commercial bank. Thank you.
All right. Dipo, thank you again. You've touched something that is very, very close to my heart. You've touched something, syndication, right? I've heard a lot of stories about how the likes of Dangote have made so much, or have been able to use the opportunity of DFIs, right? And use syndication as a very important tool in raising finances. And so I want to move that towards Gabriel now. Gabriel,
Okay.
the tool of syndication, right? I want you to tell us, how can this be used? Because most of the operators that are coming out again, they already have existing loans. They already have existing loan with some of the Nigerian banks already, and these loans are running into higher amounts of money. But they need, let's use the new marginal field right as an example. Some of them have one new field. How can they finance this using the tool of syndication? And how can that work in their favor, and how can it work against them? So there has to be a sweet spot in managing syndicated loans based on who is the lead, how can this work, and all that in terms of tools. Tell us a bit more about that, Gabriel.
Thank you again, and thank you, Mr. Dipo. Mr. Dipo elaborated a lot and spoke a lot in detail. Yes. Something that stands out before I go into your question, or this will actually lead us into the question that you have asked. If you look at the DFI, the Development Financial Institution, what we give that is different from commercial bank is patient capital, long-term financing. Our tenors are longer than the commercial banks. And also what we do is we do a lot of risk sharing, which is what we are talking about now, syndication. And I will use an example for you. When we see a project that is worth $100 million, right? Or somebody is trying to construct a pipeline, 100 kilometers pipeline that is going to cost about XYZ $100 million US. What we do as a bank is we try to engage other DFIs. Because what we're trying to do is we're trying to maintain similar interest rates. So that, because the whole idea of DFI, like I said, is patient capital, long tenor, and you get a better rates for your funding. So for us to be able to actualize that, we go and engage other developmental financial institutions around us, the likes of Afrexim, AFC, IFC, who might have appetite in this space. And sometimes we take the lead if we are the ones that are originating that project, and we get them to support us. If they have interest, they come in. And always remember that we can't do this without the commercial bank. The commercial bank are our partners. If you're going to do any business in Nigeria, you need to provide guarantees. Without guarantees, how do we know that our funds are coming back? And CBN has also, it's a regulatory decision from CBN. You must have security. You must collateralize those loans. So you need guarantees from the bank. So we work hand to hand with the commercial bank. So that is how syndication works. We come together in an environment, bring other DFIs who are interested, who have the what will I call it? They're interested. They like the project. They see the project is viable and it's bankable. It meets all their risk criteria. and they decided to go into partnership with us at around similar interest rate. And that's what we do under the syndication space.
Okay. Thank you for deep diving a bit more into syndicating so that we can understand very clearly how that can benefit from the pipeline projects. I want us to go very specific now into pipeline. Development of infrastructure, especially pipelines, which I can identify now as the weakest link both in the upstream, midstream, and downstream, because Nigeria doesn't have an exploration problem. No, as we speak, there are more than 60 rigs in Nigeria currently drilling, right? So the product is not the issue. Many storage tanks have been built now in many operating companies. FSOs are storing product now. The challenge we're having is moving this product from the fields of development, in-field transportation to terminals. That is the issue. And in dealing with that issue now, you can see yesterday or a few days ago, there were contracts being signed by Chevron and NNPC in getting gas and stranded gas from Chevron field into the AKK line and several pipelines. All this can happen because newer pipelines are being built. And we've not scratched up to the level of pipelines that are required. So up to 10 kilometers of pipelines are still required across Nigeria, running to the north, and also moving out to Europe and also African countries, meaning that there is room for more and more projects. And that places those pipeline companies like ourselves under the radar, because we want to build new pipelines. We want to commercialize the value that we bring. We want to go into long-term financing, because building the pipeline is not the only way. We take loan from the banks, from commercial banks or development banks, and then there are tenured loans that over 10 years we need to refund this money back to the lenders that we're taking it from. And you've talked about guarantees already. So my question now is that a banker said projects don't fail because there's no money. He said they fail because they are not bankable. So what makes a pipeline project bankable? And that question goes to Deepo, right? What are the things you look out for? I can bet it that you've had 10, 15, 20 projects this year and they did not see the light of day. Only very few of them see the light of day. And some of us that are operators or pipeline owner, or those that intend to build pipeline, we're a bit confused. Where is the missing link? How do we make our projects bankable? How do we make our development projects so enticing that when we put it in your face, we are sure that that fund will come to us? So what do we need to do? Over to you, Deepo.
Thank you so much. Let me go back a little bit and tell you that one of the biggest concerns that Nigerian banks have had, maybe things are getting better now, because of the security. There was a time that almost every other day, pipelines go up, being blown up and stuff like that. Nobody wants to put money in a transaction where you're not very sure that it's secure. Okay, and that even insurance companies, sometime in the past, will not insure those kind of risks because of the level of restrictions that we had in the oil-producing areas of Nigeria. Yes, things are getting calmer, and I believe that there may be some more investments or financial support, or financing support rather, in that sector. 5 years ago, I too won't fund pipeline construction. You understand? But lately, because of the calmness we're seeing, I am sure that more banks will look at it a little bit more favorably. Okay, there's a bit of predictability, there's calmness, there's security. I think that's a first risk. Other ones are just normal project risks, which is, cash flow concerns, can we make money? Even if I took money from a DFI and I provided my guarantee, I would still be concerned about those risks I spoke about. However, if I can see through, this pipeline evacuates for XYZ companies, and I know that I can make my revenues from the flow, and I know that can be serviced. First, can be serviced over 5 years and stuff. I won't have any problem with it. But I think the biggest concern in the past, which we're just coming out of, is the level of security risk. Okay, and your security risk is almost without mitigation, because you don't know what will happen. It's very unpredictable, and it's almost out of your control. So for that, you just rather stay out of it and say, well, let me just watch, and don't finance that particular part of the value chain. I believe so. But in recent times, I mean, last 2-3 years, I'm not sure there's many major issues around it. So it may be a good time for us. When I say for us, I'm talking about financial institutions in Nigeria to begin to look at opportunities in that space. That's what I think. Thank you.
Okay. All right, Dipo, thank you. If I hear you very well now, we that build, those of us that build pipelines were in your bad books for the past how many years? But I mean, coming in the last few years,
Not
a
bad
few
books,
banks have.
okay? Not bad books. We're just concerned about the risk.
Okay, thank you for that correction. So, banks pay a lot of attention to risk and reward. That's what you're trying to tell me now. And there are projections that are done in terms of balance sheets. You look at the books, you look at the paper. I said, should anything go wrong, I will lose this volume of money that I've given to them. Have they provided guarantees, or your appetite to the guarantees that have been provided, are they sufficient, or they are not sufficient? So that takes us to the issue of risk and risk appetite, right? Because these development projects, they cost a lot of money. And these pipeline companies, they need to, the revenues that are generated for these pipelines through haulage, in the case where the operator is the owner, or in the case where you are building this pipeline for an operator, risk factor becomes an issue. And over the last few years, we've seen that things have improved so much that and this banks are considering favoring and or taking on new projects, right? There should be an approach that this project should take that makes it favorable to you, right? And there are documentations that they need to have in place, right? So if development finance is about having the right structure for mainly companies that are looking for this, if you have the right documentations, then you are able to access funds that others would not be able to access. So Gabriel, coming towards you now, asking this question, what are those critical documentations or those critical positions, or what are those structures you want to check in companies that are coming to you? Let's assume they have 30% in terms of what you are looking for, and you want that threshold to get to 50%. In terms of documentation, in terms of 5 or to 10 documenters, can you just list out a few things that are very, very important that will allow companies to be favorable to you to fund their kind of projects?
Thank you. Okay, since our focus is around pipeline, and also what I want to tell you, one of the reasons why, from my perspective and from my experience, especially these are our decade of gas that we are in today, why some of the projects are not bankable, they struggle to secure finance in Nigeria. It's not that they don't have dreams. People dream, and they dream big. And when you see a project sponsor come to speak to you about a project, you can see the passion. But something that they miss or is, you want to go into a project where you want to deliver gas to your end users, and you don't have a feedstock. That means access to gas, GSP, the gas supply and purchase agreement. You don't have it. You don't even have an LOI, which is a letter of intent that when you are ready, the let's call it independent company or NNPC or the marketing firm of the NNPC is willing to support you and give you gas. Then as a bank, what am I looking for? Am I able to recover my cost? Like you said earlier on, BOI is not for profit, but more driven for impact. What impact are we making in Nigeria? That's what we look for. So first thing first is, do you have a feedstock? Then if it's like a business like Imugimi pipeline, you want to construct a pipeline, the question I'm going to ask you is, you want to charge a toll. Who's going to pay for this toll? Do you have off-takers agreement? You want to charge a throughput. There must be somebody available ready to use that line. If I don't see those off-takers agreement with you or some form of a soft agreement that shows that when you're done constructing this pipeline, they will utilize that. That's what feeds into your cash flow. And those are the things that are showstopper for a project becoming bankable. But what do I look for? Those are the things that I look for as well that makes my project move from 30% to 50%. Also, what I look for is comprehensive feasibility studies. That tells me you have done your assignment. You're not just a briefcase company just coming to me and asking you to give me money. I know based on your feasibility studies that you are ready to progress in that business. So those are the things that take your business from 30% to 70% in my own perspective.
Okay, Gabriel, thank you very much. That 20% shift, right? Very important. You've talked about GSPA having some kind of agreement in place, right? You also spoken about letter of intent. Who is interested in this pipeline that you are building? What is the value it brings on the other end? What is your unique position that you are bringing, and how short? Do you have a captive volume? That was another thing I needed to also hear from your conversation, because in some cases, they want a locked-in volume represented by your GSPA or any kind of form of agreement that you have again. You were very, very strong on that. Either a soft agreement or an off-taker agreement, very, very key to what you have said. But again, the one that strikes me the most in what you have said is feasibility study. And this is like a roadmap for any pipeline company or any operator that wants to go from point A, or the history and the story that is required to run all through before you get to the point where you're able to monetize this thing. My question again will move a bit more towards Dipo. And the question is, compared to other areas, right? Drilling and other areas in the oil and gas sector, alternative energy, how would you rate the amount of risk that is involved in the pipeline space? I know there's drilling, which comes with a lot of risk. This is you putting down to $25 million for just drilling one well, right? And on the back of that, for pipeline projects, you are even using less than that. Why are drilling rigs or drilling projects funded more than pipeline projects? I know you've mentioned risk again. There's risk in everything that we do, right? While I know that the pipeline projects take longer time, but beyond that, if you are looking at two spreadsheets now, the driller is coming to request for $25 million and the pipeline company is coming to request for $5 million to build the project. Can you tell me, run through what's the criteria for selection of this and what your appetite will be towards these two projects? Dipo, please. Hello, Dipo, can you hear me? Am I audible to anyone at all?
Yes, sir, you are.
Yes, I can hear you.
Okay,
Yeah,
I
guess
Yes,
what
you
the
are.
Okay, thank you.
Yeah, if you recall what she spoke about, what she calls strategy.
So
Okay,
Dipo,
yes.
you are breaking somehow. You're breaking. Can you hear me, Dipo?
Let me relocate. I guess maybe not working out at this point. Is it better now?
Yes, it's better now. Did you hear my question?
Yes, I had your question. I was just trying to answer your question before the network started acting funny.
Please go ahead. I can hear you.
Yeah, I was just talking about. Okay, good. I was referencing the president's opening remark, when she spoke about stranded value, meaning that, okay, the field is producing that you cannot evacuate. So ordinarily, pipeline construction should be of greater interest because that is where the evacuation is. Okay. But like I said in the past, because people had alternatives, okay, you had the clients that rather buy the products, okay, the produce from one point to the ship and stuff like that. So pipeline construction was not particularly of interest in the past. Okay, it's going to be cheaper to evacuate pipeline now because things are a little bit better. But I had customers in the past that were providing evacuation, they were providing, to barge, providing security for barges and stuff like that. Okay, but today I believe that with the calmness, we can all go back and begin to look at opportunities in funding pipeline construction. Okay, that's what I feel. So if I see two projects today, okay, and I see a pipeline that can at least, okay, that can evacuate, Congress, okay, and I'm very sure that can see to me. I probably will look at it because I know that production from the fields will just be like the president said, stranded value. There's no point. Do you understand? So I think things are shifting. So today, I probably will look at it a little bit better than I would have looked at it 5, 6 years ago. Do you understand? Yeah. If a field owner or operator presents to me, oh, we have this, we have this, and I cannot see clear evacuation plans, I won't deal because of that dependency. Do you understand what I'm saying? As much as may be interesting, I mean, the transaction may be interesting, evacuation plan is very key to a financier. So at the end of the day, which one is more important? I'm not sure I can say one is more important, but I know there are dependencies between both. Okay, and we'll look at the two transactions or the two projects, critically and be sure that we're okay. So that is that. Thank you.
Okay. Dipo, I like your line of thoughts, and you have raised another concern. You've brought me again closer to what I'm thinking. So if I'm going to shift this same question to Gabriel, I'm going to ask it a bit differently. Initially, I said drilling project and pipeline project, but now I'm adding another field, which is barging, virtual pipelines. So I have virtual pipelines, I have the actual pipelines, then I have drilling, right? This culminates, or this represents, 3 very serious projects that consume a lot of money, and DFI sees this a lot in terms of the energy space and how to monetize resources, right? And in dealing with drilling, you need to have a clear evacuation plan for what Dipo has said, whether you're going through virtual pipelines, whether you're going to real pipelines. Now, in the last 5 years, you have seen that most drilling had virtual pipelines as the evacuation, meaning that the return on investment became slimmer because using fields in the creek, right, you have to get barges, which is cost of barging is so high compared to cost of pipeline. So flipping that to you, Gabriel, I have 3 projects that are coming. One of them is drilling, and the drilling will have two evacuation routes. One is through virtual pipeline and one is through pipelines. In your own opinion, right, even if an operator is pushing towards virtual pipelines, what will be your prerogative in terms of how do you convince them, or what do you think is more profitable, building the pipelines or doing virtual pipelines for short-term return, or putting the pipelines on the ground and having long-term return? Because this, again, has its dynamics for us at the Pipeline Association of Nigeria. We want to understand it from that point of view. So when we are approaching these operators, we're able to give them quality advice that aligns with bankability and what the DFIs or the commercial banks are saying.
Okay, once again, a very beautiful question you have asked, and I would address this with real life examples. First of all, because of all these European policy, ESG, sustainability, the DFI do not support drilling. because we are supposed to be seen to be green. So that's one. But I would touch about the virtual pipeline. So I had a real life scenario where a customer was looking, he had what you know call it now, a modular refinery. And in terms of his feedstock, he was looking for access to his feedstock. And is either it goes through the pipeline or he used the virtual pipeline. And yes, it is more expensive to go through virtual pipeline, but there is also a plus using virtual pipeline. You see your crude one for one. I've managed Forkido's pipeline for years, and we have tried, and the best we have gotten our reconciliation factor to was about 95%. And so there's still a room for error. But if you use virtual pipeline, this customer actually went with virtual pipeline. So they were able to get their volumes one for one. Nothing was missing as compared to using a pipeline where vandalism can happen and you would not get your volumes as you're paying for them. You've paid for it, but once it's coming down, what you're getting is lower. So yes, if you ask me, both of them have their good sides. If you look at countries like Saudi Arabia, where the government have put regulation in place, and just like Mr. Dipo said earlier on, insecurity that does not exist in places like Saudi Arabia. So they see their crude one for one. By the time Nigerian government is able to put an enforced policy around that security, the best route to go, the cheapest route to go will be through the pipeline, not through the virtual pipeline. But today, in the world that we live, due to vandalism, the best route is to go, and you will still get it in the long run based on your volume, you still get it cheaper, is virtual pipeline. But we support both in our own space. But for the sake of this conversation and my own experience, we want to do a project. I would advise you to go with virtual pipeline today. If you're a small company that is still growing and you want to get all your volumes, you want to see one for one, and I would advise you to go to virtual pipeline. But if you're a big company like the likes of Midwestern, I'm sure Midwestern is comfortable with 95% reconciliation factor. That is a plus for them if they get it. If Forkido's pipeline is up and running 100% of the time. I hope I was able to address your question.
Yes. So, Gabriel, thank you. Thank you very much again. That means there's a lot of work that Pipeline Association of Nigeria needs to do for us to de-emphasize virtual pipelines again. Measurement systems needs to be in place. LAX unit needs to be in place. Security needs to be in place for us to get the one-to-one. So if there's any takeaway from this meeting, one-to-one has become very, very important for Pipeline Association of Nigeria. We need to ensure the one-to-one factor is ensured. The likes of some companies like Umugini here were able to get close to 1.1 to 1. So again, we are part of Pipeline Association of Nigeria. So that message needs to go out that the real one-to-one that we should look out for is through pipelines and not this thing. Because if you look at it, Gabriel, I have said it, one-to-one in terms of volume, right? Getting your volume one-to-one, but one-to-one not in terms of cost, which is also another big factor. So there's what you call cost per barrel. Cost per barrel is very important. So cost per barrel one-to-one for your virtual pipeline will be high, but your one-to-one for pipelines getting to the shore will be lost in terms of cost per barrel. Is this making sense to the financial people? Because you make it sound like virtual pipelines are better. Dipo, I want you to take this now, right? Gabriel is making it sound like one-to-one is better with virtual pipelines, right? And I will open the floor for the audience to ask their question. We'll take 2 or 3 questions. After this, we'll take to that, yeah? Gabriel has made this based on the scenario, which I understand, right? The operator has been able to prove to you that they will get one-to-one to the terminal. However, it's based on smaller volumes. But one-to-one on bigger volumes, right, where the cost per barrel will be dropped as low as rather than as higher. So, Dipo, if you can help us as our closing, one of our closing questions and responses from you, how do you think the benefits for that can come to bear, Dipo?
Okay. All right. Thank you so much. Thanks again. If you recall that Gabriel's last comment was that for a small operator, you understand. So the marginal costs, we
so Dipo, we're losing your connectivity. We are losing your connectivity.
Some of the naturally pipeline will make more sense. I relocated. I'm actually in my office, and I know there are some areas where at times. Okay, is it better now? So sorry. I'm sorry for that.
It's better now.
Okay, I'm just moving around my office. Yeah. Sorry. Yeah. Okay, I was saying that if you recall that the last Gilbert's last comment actually was to say that for small operators, okay, that it would make more sense for them if they did the virtual what do you call it now? Yeah, evacuation. However, for the big players, of course, at the end of the day, if you look at the marginal cost, it will be a lot more for them. So it's a blend, so to say, blend in the sense that you look at your numbers. I mean, for someone in finance like me, we'll look at the numbers. We'll look at the numbers. They will take a decision. Okay, it is actually more economically stable, or offers better bottom line considerations if products are evacuated by pipeline. At the end of the day, the cost is much lower. But the concern is what Gabriel raised, which is around the fact that, okay, you start at 10, but you exit at 9.5 or 9. You understand? So maybe what you said around assurances, assurance on volume, assurance on value, assurance on all of those things can give any operator the comfort and the confidence to work with the pipeline owner. You understand? That is just it. Outside that, there's nothing else any operator or any owner will want to do. Do you understand what I'm saying? So those are the issues, and frankly, look at it from a pragmatic perspective. That's actually the concern. Again, as things are getting better, as we're seeing some calmness in that space, we will naturally begin to look at opportunities there. Naturally, you understand? Naturally, but for now, I mean, well, in the recent past, it wasn't like that. Thank you.
All right, Dipo, thank you very much. Thank you. We are gradually winding down towards the end of this webinar now. While I will also want to encourage the audience to get their questions ready. So as one of our parting shots, as our last one of our last questions, and in 1 minute for both panelists, right? What is your single most important piece of advice for operators and pipeline developers seeking to finance infrastructure projects in Nigeria over the next 5 years? Yeah, we're all on this call because we see an opportunity in the pipeline space. We see a resurgence of Nigeria as a major player, right? We've seen projects in River State. We've seen massive gas that Total has found in River State in Zabazaba project. We've heard about also one of the projects that Renaissance has spoken about in River State as well, one of the offshore fields again. And these are massive gas reserves, right? If this projects are going to see the light of day in the next 5 years, what is that one single advice that you're going to give to pipeline developers and to get them ready for newer opportunities? And not forgetting that ESG is coming, and there's an opportunity for ESG also to impact on what we are doing. What would be that your one advice you give to developers of pipelines and to operators? Gabriel, you go first, please, and Dipo. Yeah, Gabriel, for you first, and then Dipo.
Okay, let Mr. Gabriel go first. Okay.
Okay. Thank you so much. One thing I want to say before I close out is you mentioned something about marginal operators, and the bid round was just officially done. You will see that a lot of people in that space, even in the past, have gone into all this without putting into cognizance evacuation. So what I want to advise people, if you're going to go into a marginal bid, what you need to first put on the table is, what is our evacuation method? If it is going to align with your cost, your recoverable cost, then you should go for it. Because if you don't have evacuation process, if you are far away from any of the current export terminal, then you have to use barges. If you look at your costs, is it bankable? Is it profitable? Are you going to make revenue in 5 years based on your assumptions, based on your cash flow? So my advice is that is a key factor. But to sum it all in summary, I want to say the things that will make your project bankable, especially in the pipeline space, is you're prepared for you to prepare. And what do we look for? Strong feasibility studies, feedstock agreement, off-takers agreement, regulatory approvals. And finally, because we are impact-driven, what impact are you providing to the nation, Nigeria? Those are the factors we look for, and that makes your project bankable. Thank you for inviting me. Thank you for listening.
All right, thank you, Gabriel. You have used your closing remark to cause more problems. You've gone towards the regulatory side, which we've not spoken so much about. Feasibility study, you've talked about that again, but feedstock is another area. So I will come back to you. Let's talk about the regulatory requirements, because you have said that regulatory requirements gives you that one feeling. Let's assume I'm doing an investment, and then the regulator says, yes, things are going well. It will impact on you. So I'll just keep that on one side. Let me take Deep's responses. Let me take Deep's response to say what will be, in 1 minute, what will be that your conversation in terms of pipeline operator and developer? What is your advice for the next 5 years? Then I'll come back again with the conversation on regulator, because we totally missed the regulatory side of it, and I think the conversation will not be complete. If a regulator is on this call now, we've invited them to come and they've not heard anything about regulators, I don't think they'll be very happy. So we'll take that on regulators again. Deep, over to you, please.
All right, thank you so much for every line of business. Yes, the resilience and one thing that is very key that I would look out for in any transaction is the business plan, or what the feasibility study. It's very important for us because at the end of the day, that is how, I look at the bottom line. I look at my returns to my stakeholders. So it's from there I'll be able to do a full a proper appraisal, project appraisal, to be convinced that yes, it's worth, and the bank puts committing funds in. So it's important that the player or the operator, comes up with a very strong business plan showing very positive cash projection. And of course, we're good to go. Thank you.
Okay, all right. Thank you very much. Thank you, Deepo, for that. Now, the conversation on regulatory or regulators and their impact on projects. I want both of you to talk about it. How does the position of the regulator impact on bankability, right? I have interacted with various consultants that do energy infrastructure projects, and one of the things they talked about is how you have a long list of documents, and then not just that again, how are they tied then to the requirements of the regulator? So from your own point of view now, what do you think, and how important is regulators' nod in bankability in terms of going ahead with the project, right? So I want both of you to take that as your parting shot again, just for us to quickly go, because I see a lot of questions trickling down again on the group chat again. So what place does regulator play, and what impact will they have on bankability of project? Gabriel, I'll come back to you, and then Deepo can close out on that, just so that the regulatory side again, we don't ignore that, because without the regulators, even no matter how bankable the project is, regulators will stall it. I give a typical example. On one of the export pipelines we have in Nigeria, we had a long line of one of the best fields in Nigeria along that line, and they had one export pipeline to terminal. But if you put a product on the first side of the product on the inlet side, On the downstream, when you get to the terminal, you barely recover anything. Almost 90% losses was happening at that time. And then there was a ban on that pipeline by the regulator, saying that everybody on that side should use virtual pipelines. And it began to promote a new direction in how things used to go. And NNPC as a whole began to also support that, to see that your one-to-one that you spoke about happens. But again, you eyeball the product from where it comes into when it gets to shore, right? So those kind of shifts can happen. Even if projects are bankable, regulators can change the direction. So can you give a bit more that narrative on how important regulatory node is for bankability of project? Gabriel, please.
Thank you so much. Okay. I will use LACT unit as an example. You want to purchase a LACT unit for your pipeline, for where crude are going to be going through. And the regulator has not certified that LACT unit. And I cannot see any certification from them. And I go ahead and give you the funding to bring in the good to Nigeria. And this because they've gone to do FAT, factory accepted, and nothing to show for it. And I go ahead and support that project. Trust me, without that approval from the regulatory standpoint, that project is not bankable anymore. That project has failed. For example, you're also constructing a pipeline and there's no license to operate. LTOs are not there. Why am I supporting it? License to construct, you don't have it. Why am I going to give you funding? That does not make that project bankable. So the regulators are very key and they are very instrumental in making any project bankable. If they don't give you the green light, I, as a DFI, will not support that project.
All right, Gabriel, thank you. Very simple and sweet. And using analogies again, I think they are very, very important part. Not just one, but you have used two again. Very, very straight. And that is why we like to involve professionals that we bring into our webinars. They have ready-made answers already. They've been through these procedures. They've done it one too many times already, and they have a lot of experience. So, Gabriel, thank you very much. The parting shot again will go to Dikbo. Our admin at the back end, I believe you are collating the questions already. I will need someone to take 1 or 2, 3, or 4 questions again from key questions from what the audience has already collated. I believe people are asking questions. We will be able to take 3 to 4 questions on this. And if they are more specific to who the question is directed to, is it directed towards Dikbo? Is it directed towards Gabriel, so that we can trash them as we go ahead? So Dikbo, I'll give you the parting shot for the conversation and question on regulators and their impact on bankability of pipeline projects.
Yeah, just like Gabriel said, clearly we can't proceed without the regulatory approvals. It's one shot that can kill everything. You understand? So we will require all those approvals ahead of disbursement at the worst case. Even if we give you approvals and say to use a condition precedent to draw down, we'll wait for those approvals to come in before final disbursement. It's very important because, like you said, you could start and massive losses are going to be staring you in the face if for any reason the regulator comes and says no, you shouldn't have done that. So the big stick is what the regulator wills, and we have to be very careful and ensure that we have the approval before we go ahead. So it's in fact, we call it regulatory risk in what we do, regulatory risk, and it has to be fully mitigated before we can proceed. Thank you.
Dikbo, thank you. I like that word, regulatory risk. So with the word regulatory risk, I think that those are the sessions we will have for the panelists, and I want to thank you guys for your deep insights. We will push and move the ball towards the audience now. I'm seeing a lot of questions that are here. So Alison, you're on the back end. If you can take those questions, I'm not seeing them clearly. Do you want to read them out, or is there someone on the back end that wants to read those questions out? So we can pass it on to our panelists to deal with them. So who wants to take that from the back end? Who's saying that? Michael or Alison? Who is there to take this?
Okay, confirm if you can hear me.
Loud and clear, listen, we can hear you.
From the question I'm seeing here, you have a question from Joseph. Joseph is asking, what's best technology to safeguard, maybe technology in terms of financing, I think, yeah. What best technology to safeguard pipeline projects? That's a question from Joseph. And then somebody is asking from Gilead Energies and Technologies, how about guarantees? Maybe more insight on guarantees. Then I'm also asking.
Okay, just hold on, there. Let's
Currently,
take this on. Just hold
confirm
on.
if you can hear me.
Loud and clear, we can hear you. Let's take these 2 questions that you have given first of all. Then we'll go ahead to take more questions, so we don't
Okay.
lose the questions that we have. Gabriel and Victor, did you get the question? One of the questions on guarantees. You mentioned that when we started this call, that irrespective of how favorable a project is, DFIs would definitely pass it to commercial bank because of guarantees. So can you talk a bit more? Dipo, I want you to talk about it first because you are a commercial bank, and then Gabriel, tell us from your own back end why these guarantees are quite important. And then the second question, Alison, you might need to take that again. Just skip me. I think we'll have a few more questions again, so we can run through that as we go ahead. But let's start with guarantees, please.
Okay, should I take the Okay, you can go ahead, sir.
Okay. Guarantees are essentially instruments issued by one party in favor of another party, saying that in the case of default by a third party, party A should be held responsible. That's what it means essentially. In this transaction, in this structure, if I need to work with Gabriel action that Gabriel is providing the funding. Okay, Gabriel will require of me a bank guarantee. Okay, saying that Shag will give me a bank guarantee and I'll make available $10 million to XYZ Limited for pipeline construction. What in essence is that I'm going to take the credit and the business risks. Business that in the unlikely event that the business fails, in the likely event that the transaction fails, okay, will still be liable or responsible to paying Gabriel back. So Gabriel does not care about whether the transaction survives. Okay, that is the level of guarantees that I will provide to Gabriel. That's BOI in this case. There are other cases that guarantees may not be required. I could put the transaction on my balance sheet and fund it directly myself. In that case, I won't require guarantee from anybody. I'm taking the risk on myself. I'm providing the money to the customer or the borrower to do the project. So I'm taking the project risk and all the risk associated with the transaction. Okay, that's why I try to explain what guarantee means at the beginning, to say that it involves like 3 parties. But there's another part of it where I, as a commercial bank, will do transaction myself at my interest rates, and if it's favorable to the operator or to the customer, he accepts the interest rate and we go ahead. The advantage that a DFI will always provide, like he said at the beginning, is number 1, longer tenor, which we call as corporation capital, and lower interest rates. But if it's a deal that the customer looks at and says, okay, in 3 years, I can pay 25 to 28% interest rates, looking at the dynamics of the transaction, I can't wait, put it on your balance sheet and lend to me. In that way, in that case, then I will be lending from my balance sheet and I will require guarantee for that. The other way guarantees work at times is if, for instance, a local player has a parent company abroad, okay? And the parent company is a known name. The parent company can provide me with a guarantee and say to me that, oh, if this fails, hold me responsible, but provide funds to the local player. So guarantees can work in different forms, but essentially it's an instrument posted by one party to a lender saying that if there's a default, hold me responsible. Thank you.
Okay, Dipo, thank you. Nicely put, right? Let's go and hear from DFI side. The Q&A section is buzzing. Too many questions we are going to take. We might not be able to take all of them, but we'll just pick a few questions. Gabriel, let me come to you in terms of guarantees. What are your takes on that?
Thank you again. Okay, mine is very simple because Mr. Dipo has already spoken largely about what guarantee provides and what and how it's being done. But from our own standpoint, this is a CBN regulatory mandate that they require that all loan must be secured by collateral. The collateral can be legal mortgage, can be bank guarantee, but at the Bank of Industry, legal mortgage tend to be a bit more complex. So we try to go through the bank guarantees. And what the bank guarantees do for us is they provide a comfort that in a place where the customer is unable to make payments, the guarantees kicks in and start making the payment for the customer. That just shows that our money is safe. And like people say, they said the DFIs don't take any risk. Something we do in today's world or we've introduced is actually following the money to the bank. Because as a DFI, we're not a money depository bank, so we don't collect money. But what we do is we try to look at the bank statement of the customer. What am I trying to say here? We're trying to look at project finance and to ensure that what they see on their cash flow is what we see in their bank statement.
Okay. Gabriel, thank you for that sweet and short response that you have given. I see some very interesting questions on the chat, and I'll just read one of them very quickly. I'm not sure something energies and technology. Very interesting question. He's saying that small operators access conceptually funding financing for their current product, right? He's now making a reference to Dangote. He said the likes of Dangote can access financing from Afreximbank or Bank of Japan, for example, at low rates, while the guy that is trying to develop that doesn't have access to that kind of funding. It seems very unfair, right? How can you guys justify giving Dangote a lot of funds rather than the upcoming pipeline operator, or as the case may be, crude and oil producer? Why do you prefer them to Dangote? If you can respond to that, Mr. Tipo.
All right. It comes down to risk assessment. That's just the bottom line. How do we view Dangote? We look at Dangote, look at the entire business plan, look at other sources of cash flow, other cash flow sources. Okay. Every bank that lent to Dangote at the beginning of the project, they were looking at Dangote's businesses outside the refinery. May event that also the refinery failed, they had recourse to other cash flow sources, the cement, the sugar, and stuff like that. Of course, the risk has changed now because they have started producing, and of course, cash flow is coming from there. But that is how a bank will always do an assessment. So for the younger players or for the smaller players, it is still a case of higher risk, So when the bank assesses a smaller player, the bank sees higher risk. Okay, and because of that, you may not be able to either avail at all and do closer monitoring and stuff like that. That's just the difference.
All right, thank you very much, Dipo. Any comment from you, Gabriel, on that? Anything you want to comment that Dipo has made?
Okay, can you come back on that question? I didn't quite follow it.
Okay, so someone did mention in the book that whether it's DFIs or commercial banks, they prefer lending where they can syndicate to lend to Dangote refinery or the Dangote business, and as they could be. Dangote funding for trucks. You just look on Lekki Ekpe, you see 1,000, 2,000 trucks again. We know those are funding, right? But the common man on the road that would have come again to grow as new revenue or a new stream and doesn't see that level of financing. What does Dangote have that these people that you're looking at don't have, that your preference is in syndicating? All the banks will do all what they can to put their monies together to lend to the Dangote rather than the man on the streets or a new player, as the case may be.
Okay, that's a very good question. And whoever asked it, very intelligent question. But I want to give an assurance to our listeners today and our viewers today that we DFI Commercial Bank are not supporting Dangote because of his name. We are supporting him because, one, he has a very strong feasibility studies. He has good and strong financial cash flow analysis that he has done. 3, he has done business in the past and he has proven himself credibility. And finally, he has all his regulatory approvals in place, which is very key. Regulatory risk, like Mr. Dikpo said earlier on. So we are not supporting him because of his brand. We are supporting him because he has all the requirements that we are looking for, and he's checking all the and he's checking all what do you call it, all our requirements. He's checking them and he's passing them. That's why we the DFI and the commercial bank stand behind Dangote. It's not really the name. So the layman outside, the common man outside, if he meets all our demands, all our requirements as well, we would support his business by providing all I've just listed.
Okay, thank you. Thank you, Gabriel, for putting it that way. Fine, a good institutional record has been set already. You have a history already, which is built on today. History from related businesses has now formulated into the document. Also now use these cash to guarantee spread. So well said. I will take one last question. Gabriel, you typed the question, Alison, rather. You typed the question down. Can you unmute and just tell the person directly to one of the panelists? So we can take that question in terms of the response as we go down.
I can't hear your question.
No, not you. There's an Alison Gabriel also on the call. He dropped the question which he wants us to be addressed. So I just want him to unmute and ask that question. Direct it to one of the panelists who you think that is most so you can take on that question. Someone has quickly dropped another one already. So Gabriel, let's take yours first.
Okay, confirm if you can hear me.
We can hear you loud and clear.
Yeah, I'm directing this question to Sir Gabriel. We can see currently that in our system, what happened during the AKK, from when AKK was conceived down to date, and when other projects too are being conceived, other than pipelines, we see that we do practice ad hoc risk sharing formula. Guarantee mechanisms are always discussed afresh. Just like what is going on now. Morocco is sourcing for financiers for the African Atlantic Gas Pipeline project. So I'm asking, this risk sharing method, this agreement that are being done pipeline by pipeline, project by project, is very time consuming, is draining, it requires a lot. It will make projects that are supposed to take 3 years, 2 years. Before we know it, they will be ending up taking 8 years, 10 years, just like the way AKK took. AKK took a lot of time before we were pushing first gas by 2026. My question is, what if our government, the federal government, institutionalizes a credit guarantee mechanism under, maybe as a window under the midstream, downstream infrastructure gas fund? What if our government formalizes this credit guarantee mechanism to attract investors to projects? Instead of we starting up discussions afresh, discussions anew, we just have a window where we can apply for credit guarantees. If you tick the technical requirements, financial requirements, mitigation plan requirements, and all of that, you can go ahead. What's stopping us from having such an institution in Nigeria?
Thank you.
So
Let me answer your.
Okay,
Some
go
of.
ahead.
Okay, thank you. Okay, I think some of these things is awareness. Do you know about infra credit?
Yeah, I know of infra credits. Yeah,
Yes.
a local financier.
Do you know that they provide guarantees to all major gas projects in Nigeria? All the likes of
Exactly.
Greenview, GLNG, they are the ones that provide guarantees for them. I see the guarantees on my table every day. They provide guarantees, and guess what? The federal government has the shares in that institution. So I just wondered, if you don't know, I wanted you to know that there are guarantees out there. But my question for you is, can you meet their requirement? Because they have a very stringent requirement that they go through. People that scale their requirement process, by the time I see it, 9 out of 10 times, they also check my own boxes. So the question is, can you tick all their boxes? That is the question. Yeah. But in terms of, is there a guarantee scheme out there to support gas infrastructure projects? Yes, there is. InfraCredit is one of them.
Just like, I don't know if I should extend this, just like the way federal government also provided that guarantee for AKK, where the Chinese lenders were at one point going back and forth, and federal government stepped in. What was now the difference between why infra credits didn't come in and all of that? What happened?
Okay, so if I may come in, then Gabriel, federal government will not be able to support all initiatives, right? They have a threshold. They have a threshold which they can take. So they decide their appetite, just like the level of bank where commercial banks and the DFIs, they have a set risk band or risk level they can take. So they prefer public-private partnership, which is infra credit. So they might give 40%, 50%, and infra credit brings another 50%, and they give it to infra credit to manage. Why have they done that already? They've done that so that they are able to manage the risk. Because when people find out that funds are owned by federal government, they might not take it very seriously, and they might not be able to manage it properly. So yes, and federal government has stepped in to support or assist the Chinese bank or the other banks that are in, and put their line of credit for that. But how many people can they do that for? Right, so they might not be able to do that for everybody. That's just the simple response to your questions. Right, but again, Gabriel has provided a direction which I never knew before, that bank guarantees again can be gotten from a Nigerian bank infra credit again, and that's an important one for us to know as Pipeline Association of Nigeria, because we get a lot of calls from companies, from operators on how they can secure some of all these values. So information is very, very important, and that is one of the things we have gotten for free from the two panelists we have here today. I want to especially thank the both panelists that we have, and if you don't mind, the entire audience, can we put a round of applause again for Olusegun Oladipo of Providus Unity Bank, and also to especially thank Gabriel for their for making it to this program and to share these deep insights that we have. I want to thank you guys so much for doing this.
Sorry, moderator, my hand was up. I don't know if you are not taking verbal questions.
Apologies for that. Joe will take your question. I don't, any other hands up? We'll take the hands that are up very quickly. Time is fast spent, but we'll take your question. Please go ahead and direct it to one of the panelists so they can deal with it. Yeah.
No, permit me to just throw this open. Is a concern I have. Thank you, guests, panelists, and moderator. It's been awesome. So my question is on the sustainability of these virtual pipelines, especially this alternative crude evacuation by barging. So we had about 50 marginal fields come on stream 2022. Now 37 awardees last week, and we hear that another bid round will soon be coming up. So it's convenient at this point having some operators barge their crude. So in the scenario where we have 60 more fields producing and choosing the option of barging, what happens to our waterways? So I think in as much as we identified the challenge with security, and on the short term, it's badging is a better option. I think we really need to walk to a point where we go back to the traditional pipelines. And then, so I want to hear your whoever has a take on the sustainability of these virtual pipelines by badging should comment on it. Then, secondly, what does the PIA say concerning crude evacuation? What does the PIA say? Is it at the behest of the operator to decide? If it's like that now, will it be like that perpetually? Thank you all.
All right. Very insightful question then, Olumide. I'll leave that open for the both panelists, whoever feels to take a shot at both questions. So the floor is open for both panelists, please.
I think Gabriel should just go. Since he has been a player there, Gabriel, please guide. I'm sure you can guide an answer here, please. Thank you.
Yeah, so Gabriel, are you there?
Yeah, I'm here. I'm here. He asked a lot of questions. I'm just looking at where do I start, where do I end. He's asking about PIA. What does PIA say to this? He's asking this bid round. What's going to happen to our C? Well, like I mentioned earlier on in my presentation, or while I was asked the question, and one of the questions I addressed, what I said was that for the small players, virtual pipeline might be more the way for them to go. But the big players, the kind of volumes they move every day, virtual pipeline will not work. They need the actual physical pipeline. But in a case where the physical pipeline is down, they can weigh the options of badging. But also put in cognizance that when you go the route of badging, it increases your cost per barrel. And you have to look at your recoverables. Is this going to be, in the long term, is this bankable for you in terms of if you're getting a loan from the bank to do all this transaction? And also, you have shareholders. Are they going to be happy? Because the goal is to make your shareholders happy. And that is the goal when you're running a company that is for profit and not for it's not an NGO, it's not a charity. So those are the things you need to look at. But in terms of what does the PI say, I will have to read it and come back to you on that, because I won't be able to provide an answer to you on that today. The PI is a big Bible and covers a lot of things. So sometimes we still use it as a guide. We go and look at it and to be able to give us better understanding.
Okay. All right. Thank you, Gabriel. I'll just lend my hand in terms of the conversation. So, small players can do virtual pipelines. Yes. If you have paid attention sometime this year, around February, March, the gas master plan came up. And why did the gas master plan come up, right? Why we know that our waterways are busy, and the likes of NNPC, the bigger players have talked about it, that this virtual pipeline might not work for them. So they've institutionalized and taken time to do feasibility studies across Nigeria to put a gas master plan. What that gas master plan does is that almost every sector, gas field, and region and all have been covered by that gas master plan already. Within those right of ways that we are, those gas master plan, crude lines can also run in that line. What that means is that NNPC, being the company for Nigeria, has created a road connected all the areas. That means that if we are investing in developing that pipelines, every field or every area. So going down to your question, water pipelines are not the real solution, but building this matter will help to connect everything. Then going back to the PIA, why the PIA deficit in the us to manage the NOC, being NNPC, has thought it wise to have a master plan that can connect everybody. So I think the focus for operators that are coming on here and for the new marginal fields that are coming on is to focus on areas where there are huge massive fields where infrastructure has been mapped out already, so that as you are improving your field, you are implementing the master plan. It gives Nigeria a route, and so that we can feel like a certain, and then they are secure to ensure that product gets to the terminals. That would be my feedback to the person that asked. I will take one more question. There's someone that have been here since the beginning. KKC.
Yeah, KK Resources is there.
Please, your hand. Take that as the last question. For time fast. And move to the other part of the program. So KKC, please go ahead.
Hi, thanks very much. I am in London. So our company is called KKC Resources. So we are talking to a number of EPC companies that do pipeline on a large scale. And I always struggle to find information to be able to give them a project that they will do. They are financially capable of doing the trunk lines, renewing the existing pipelines that are damaged. So they won't be in the $10 million bracket. They will be able to do the like Amukpe kind of pipeline. So where do we get the information from, please?
Okay. Thank you very much. I'm not sure if our president's on the call to answer that question. If she's not, I'll take it. But again, Engineer Ngozi Adeleke, are you on the call? Take that for KKC.
Still, I'm on the call, but his question was breaking up, and I don't know whether it's my network, so it's in out. Please, can you quickly summarize the question again?
Where do we find information about the pipeline? Do you have a master plan of the pipelines? I know there's a gas thing, but what is the requirement that I can present to an EPC company and say they need 100-kilometer pipeline from somewhere offshore to somewhere, and then they'll look at it. So we need to find the information.
Yeah, thank
and
you.
we'll be looking at the trunk. It's not the individual ones going to marginal fields, and they would happily do the gas ones.
Okay, so very happy, and thank you for this question. What I do know is that the federal government is trying to put together a think tank from the presidency, and I think via NNPC, to understand, what does our pipeline infrastructure look like. So maybe a good point to note, like for example, so Renaissance owns the biggest pipeline network in Nigeria. We did looking to expand and what have you, but it's a JV. So it's a JV, and I would imagine that, for example, if you're going to come in to say, okay, Renaissance, I would like to, finance pipeline expansions that you have, you would have to come through you just pick our Renaissance. In fact, I think I will if we spoke, and then I would direct you to the right person within the organization who can give you. It's usually our commercial and new business development team who can now say, okay, fine, based on that, the financing that we require for this. But just to recall that it's a JV. More often than not, it would come in when we get the funding. It's usually federal government related. Do we have national pipeline infrastructure for now? No. We do not have a national pipeline infrastructure, but I do know for certainty that the federal government via NNPC is trying to build certain pipelines, basically to just increase, let's just have redundancy on all our major networks. I do know that's what's happening. How that is funded, okay, I'm not privy to that because it's the NNPC
in touch
that's
with
doing
the
that.
Ministry of Gas, so they've asked that we should write them a letter with capability, because there's a lot of gas that needs to go onshore for the domestic obligation. So so we are sort of talking to them, but it's still a bit difficult to find information as to what is required, where is it needed. What I'll do
Because
is I think I'm connected with one of the members, so I'll try and connect with you on LinkedIn as well and see if I can send you some direct information.
that works. That works.
And we'll be in Nigeria in the next couple of months. I will try and convince. Today, I spoke to a major pipeline company in the US who are building the longest pipeline in the US. They're like, oh, what's happening in Nigeria? So there is a lot of interest, but people cannot find information to then do a bankability report. So that seems to be where the thing always, because everybody looked at the AKK, they're looking at the Nigeria, Morocco, and like, okay, where's the information about it?
Oh, yeah, okay. Yeah, and fair comments. So
Yeah, I'll connect with you and see if you can. I'll send you specific questions and see if you can direct, because these people will be looking beyond the smaller pipelines and be prepared to do the bigger pipelines.
the
Yes.
really big ones, indeed. Indeed. Okay, no
Investment.
problem.
Yeah.
We'll look out for that then.
Thank you
Thank
very
you.
much. Thank you.
Okay.
All right. Thank you, KKC Resources. And again, thanks to our president for that question. This is the kind of conversation that we try to foster. That's why we're in Nigeria. Our duty is to provide. We also have the secretariat that backs the president as well. The secretariat is also on this call. So if you can, I'm not sure who's invited you to this call. Probably you can drop details, maybe an email, right? And our secretariat will pick that, and you can follow. You can probably do an email again just to follow. Our duty is to ensure we disseminate as much. We don't have all the information, but the little we have, so we can make meaningful projects. Get our resources. Well, thank you again for that conversation. So we can quickly go to the next part. If you can put the agenda. Yeah, I think the next agenda is just to do a recap of key takeaways again from that. Be on my own. So for this project, the conversation we have today, I think we've had a very rich and robust discussion. Two very good panelists again from two different sides of the same coin. DFI looking into bankability of pipe. On this call, we talked about mitigation, how banks are coming together again to manage bigger projects. We talked about patient finance. Gabriel said DFI funding, patient finance used to have. If you recognize already in Nigeria, usually for a huge fund usually 5 years. DFI has expected to extend that in some cases 20 years, and that's managing risk also has come up as very strong. In bankability, you need to provide a very clear risk plan and risk-free or mitigated. That is really when funding can be found in this space. Another area that we talked about also, the commercial banks are partners to DFIs. That's the conversation we had here today. Very, very insightful. We talked about the risks that are being red flags again that banks don't want to happen. So whatever your projects are, friendly as possible. As much information, feasibility study, soft agreement, off-take agreement, letter of intent, GSPA agreements, take your project. Maybe one also very important issue we spoke about is regulator alignment with projects. The bank, DFI, don't want to touch any project that are anti or against policies of the regulator. So your project must align with what regulator is. And the issue of lack was used as a very clear example that Gabriel used. Very insightful. I like to put that also. We talked about new marginal fuel prices and why natural pipelines are selected. It speaks so much about it that it has to do with risk and clear documentation to where can come from. These are some of the conversations we had here. Wonderful questions were asked also as regards how in the likes of Dangote is being funded. Smaller companies are not, and our panelists were able to make it very clear. There's been a long relationship, there's been giving cash very clear. Dangote has also made guarantees for the refinery, and that has helped also. There was conversation about the gas master plan, here today because at plan, Pipeline Professional Association of Nigeria, we are running with core initiatives that the Nigerian government and our NOC has put in place. And that means the gas master plan is very important in what we have done. That summarizes our key takeaways for this particular project. All right. I want you to put a slide that has to do with DBTEX 2026. DBTEX is the reason why we stand today. If you can play the video, please go ahead and play the video. Let us hear what DBTEX 2026 is all about. Then I'll talk about it.
Please, can you enable sound? Enable your audio, please.
Just start the video again from the beginning and enable sound. I can't hear anything. In case you can hear.
Please, Michael, go ahead and run the video.
All right.
For 10 years, we secured pipelines, protected infrastructure, strengthened integrity, defended the flow of progress. 10 years of securing pipelines, now financing their future. Steel in the earth, vision in motion.
All right, Michael. Thank you for running that through. Again, just to give the audience a feel, 10 years of doing pipeline, of ensuring that pipelines in Nigeria work. That's for DBTEX. Then for Pipeline Association of Nigeria, 20 years of being here, and we are keen on making an impact. Again, that's what the conference. We have again the young professionals very soon. We have CEO session next month. We'll be interviewing as part of our conference in CEOs of pipeline. Give a feel, talk about financing, talk about the state of pipeline in Nigeria and the way forward. And these are deep conversations that create the path towards the conference we are having. So the conference is going to hold in Abuja the month of November, between the 17th and the 18th of November. Like I mentioned, the young professionals will very soon. Beyond that, again, looking at the DBTEX conference that we're going to have. Can you change the slide to the DBTEX conference, please? 17th and 18th of November, we are going to meet in just conversations again. We believe that this opportunity will give us to sign deals in pipelines, deals in gases, deals in LPG, that talks about evacuation generally, and so you are invited to join. We have a very active website. You can go to registration is currently ongoing for executives. Early bird is currently open at where you can register and get some huge discounts. What are we trying to do? You where pipeline professionals, where operators can sit in the get deals signed, listen to the nitty-gritties of what our challenges are, and do and get them to get away, because we stay away from each other too far and not able to deal with the issues. If you are listening keenly to this session, a lot of clarity has come. We heard about Africa, the credit financing, infra credit that we heard about, a lot of other initiatives here. So we want to come to you, the operators, those financiers, foreign financiers, and local financiers. ACC has talked about. We want to help all of you to come together, put the right people in the room, and ensure we are creating a sustainable solution for Nigeria. Like I mentioned at the very beginning, we're having a resurgence of investment in Nigeria. 1 billion naira investment signed 2-3 days ago. New fields are again. That means there's a lot to be done in Nigeria. Nigeria is very open to investment, and Epitex, Pipeline Association of Nigeria, to create that environment for everyone to meet and to have this conversation. So you are welcome to join. The Pipeline Association of Nigeria also has a secretary that is very active. Email us and you call us insight as we can. That being said, can we go again to the next agenda on the that we have today? Is someone asking a question? Saying something topic. All right, okay. Okay. Pipeline Infrastructure Nigeria Limited, also one of our platforms. Thank you for joining. They are saying they are present. Yes, I mean these are companies that can help to deal with infrastructure issues, build new pipelines, by value for operators, as the case may be. The next agenda, I don't see if you can take it off a bit. I'm not seeing. Talk about the conference and what the next webinar. So the next webinar mentioned, we're going to have a CEO session, and that will again help us to lean on the ideas or the challenges that the CEOs are facing, and that will help us to deal with new issues. So we go to the last element of it is closing and announcement. The next webinars that are coming, the YP webinar that is coming, also any more webinars that we announce. Please keep in touch, watch our website, look at what we're doing, so we'll keep you informed. If someone has invited you to this webinar, please keep in touch with that person and reach out to you. Most of you that have joined here will have email you to tell you when the next So at this point, I will hand over to the President to give her closing remarks while we close this meeting. And I also want to thank everyone for being here and for this. Engineer Ngozi Adeleke, please, the floor is yours for closing remarks.
Okay, go ahead.
Top line, we're getting all our members trying to identify themselves. Top line is saying they are here. Well done, top line. Thank you for being a part of what we say. Umugini Pipeline Infrastructure Limited also well represented here. Residents well represented. Any other company well represented there, you can unmute and just say hello. Let's know who else is here and each and everyone here. Sorry, President, for taking that. Is there any other company represented here? You can unmute and just say hello to us. You type on the chat. Let's know. BGT is present here. Well done. Thank you for representing BGT. Who else is here again to represent the of Nigeria? All are here. Any other person? Any other company? Okay. All right. Thank you. Thank you. President, please over to you for final closing. Thank you.
Yeah. Thank you. To confirm, you can hear me and it's not breaking up. For some reason, it's going in and out on my end, and I'm hoping it's not my network.
Madam,
I've turned off my video.
We can hear you
very clearly. So this is just to say thank you to all our panelists. You know, I was looking and you can imagine we've done actually 2 hours and it doesn't look like, you know, we spend that amount of time here. And why? That's because the conversations were authentic, they were real, and they answered, you know, the answers and the responses were really addressing the meat of the matter, the real situations, and talking and explain about how financing comes, what it would take for us to, you know, tick the box. So a lot of us that have heard this, and yeah, thank you. I'm seeing all our partners and our members who are basically you know, registering their presence. Thank you as well for doing that. So to Mr. Oladipo, Yemidale, and for them, I just want to say thank you. And of course, our moderator, okay, you were excellent, you know, in the way in which you parried the questions, and you were able to just follow on and make sure that we had really insightful and exciting conversations. Thank you very, very much again for everything that you have done today. Looking forward to the next session with the CEOs, as Oke has said. So here is to us keeping safe, but more importantly, I think here is to us taking what we have learned, what we have heard today, basically about what it will take for us to be able to access investments and financing, what it will take for us to ensure that our businesses and our projects and our initiatives are bankable. such that we prepare ourselves and make sure that we may not be Dangote, just like you said. He's got a track record, he's got everything. However, it's important that we can begin to build our roots, and if we can just begin to follow the checklist, follow and try and meet the requirements, I tell you, the sky will just be the starting point for us in Nigeria with respect to pipeline infrastructure financing. Thank you, everybody. I'm asking us to please make sure we begin to prepare for the NIPITEX 2026 conference. It promises to be a very, very insightful and profitable session for everyone who comes in. Thank you, everyone. Let's enjoy the rest of our day. And thank you for attending this first episode. Look forward to the next ones. Thank you to all the organizers as well. See your hard work at the back, and it's very well appreciated. Well done, and have a great rest of your day.
Right. Thank you. Bye.
Thank you for having us.
Thank you so much, ma. Thank you, everybody.
Thank you for having us.
Thank you.
Thank you for having us.
Thank you for attending. Thank you.
Please, ladies and gentlemen, just one final announcement. I have posted a link in the chat. It's a feedback form. We would appreciate your inputs. Give us your suggestions on improvements, what went right, what went wrong, what was the quality of the speakers, how we met your expectations. We really appreciate if you could fill that for us. So the link is in the chat, and I look for your feedback, and I hope to see you next week for the Young Engineers webinar that will be taking place. All right, thank you very much, and good night.
Okay, bye.
Bye-bye.
Thank you very much. I thought we'll be playing our music by now, our intro.
Our intro, we can play it for you. We have jams.
Please,
we have
play
jams.
it again.
At the end of your speech,
you are going to be playing it.
Michael,
well done.
Over to you.
Well done, Alison. Well done, Michael. Well done, everyone, for a wonderful turnout today. Well done.
That's it. Okay, you did a fantastic job, and you kept to the time, even with the challenges that we had. So
you know how to
well
watch.
Done.
You know how to watch somebody. I tell you, you know how to watch. I've told you before, so.
I know. Okay, if I want to watch you, I will sit down and collect it. But there's no money.
I'm enjoying the music. We'll talk later. Let's listen to our NIPITEX music.
Michael seems to like this background.
I like it too. Take your pistol ahead. I love it.
Very nice, yeah.
I love it.